All right, Chapter 2, Homogeneity Principle, Railroad Accounting Principle, Volume 2. Homogeneity Principle, Statement of the Principle. Cost information should be organized in a homogeneous cost pool. The homogeneous cost pool is a group of the costs governed with the same set of determination, which responds to the change in output essentially with the identical manner. Some homogeneous cost pools may be considered with an interchangeable resource. Resources considered with the interchangeable that can be substituted for one another without loss of the efficiency. In such case, the cost resource should be assigned with the cost objective to the base average cost for the interchangeable resources. Explanation: the group of the costs are assigned with the cost objective such as the movement of the goods for the means of the measurement of output. Both of the costs assigned with the measurement of output, but the homogeneous of the group homogeneous cost is known with the homogeneous cost pool. Similarity with the most exists for the cost of homogeneous cost pools lies with the causality relationship between the individual costs and output and input, and all costs must have the same causal relationship with the measure of the output which will be used to assign with the pool the cost objective maintenance of the way such running sub activity the way the structure's activity the USOA is an example of the cost of often believed with a homogeneous collective, but at the system-wide level, to say if a range with such a large pool heterogeneous should be broken up into the density category with the geographical area achieved with the homogeneity root accounting principle board has adopted with the position of the particular practical relationship reasons such discussion with the cost center of the page 14 and 15. The application of homogeneity principle of the cost of the pool it must be explained with applying with the principle of general purpose costing. General purpose costing homogeneity is achieved in two steps. The first cost is similar resource collected with the cost of the pools required by the USOA. The highest level of aggregation in the USOA is compromised activity with the broken down with the activity turned and broken down into the functions. Or your second expense, which have been broken down with the accordance with the USOA, aggregated into relative few cost principles, known as the accounting groups required by the Uniform Railroad Costing System. The accounting groups are used in, depending on the variable, and they analyze use the progression analysis incorporated with a particular measure of the output. 16 accounts for the group that are used in the Uniform Railroad Accounting System. The homogeneity principle governing the establishment, but the accounting principles govern none but the uniform railroad costing system functions in the form of the remaining of the function segregation of the variable of the cost of the fixed rate of the 2, the assignment of the variable cost for the output measure for the switching the minutes and the train miles. Assignment of 3, the assignment of the variable cost to cost objective. The first two are governed by the casualty principle. The third is merely a mechanical principle. Interchangeable is a subset with a homogeneity principle represents with the maximum degree of the homogeneity attainable. Interchangeable is characteristic two more resources that are interchangeable with one another, such as gallons of fuel wages paid by the employee performing the particular function. Conductors, for example, the locomotive of the same module and age. The cost of interchangeable resources should be charged with the average rate with the cost of specific resource for the one locomotive of the group. And the interchangeable locomotive, for example, should not be identified with the particular cost objective to which they are applied with the particular movement of the good. For example, interchanging them minimizing the chances of the variation when effective with measure. For example, if in one of the chances determines the one of the conductor instead of another were used with particular train difference with the pay between they should not affect the measure of the cost. The elimination and change of the variability. This is an application with the interchangeable expect with the homogeneity principle line with behind the most of the normalizing procedure for the general purpose costing system. And as the uniform railroad costing system, for example, the average expense for the several railroad reduces the effect of the change of the variations among the years. Interchangeability must be applied with care, even though all the locomotives of the same specification must be interchangeable. For example, the closer the locomotive established new locomotive with the specification used primarily through the reduced probability of breakdowns, while the older locomotives with the specifications are primarily reserved for way trains. In such case, with the locomotive in theory, which should be charged individually. Two types of service that should be cost for the breakdown locomotives are not interchangeable. The homogeneity principle is closely aligned with the practical principle to consider whether the required additional cost pools of the benefits likely derived from the information must be weighed against the cost collection reporting. For example, the recording fuel expense by the locomotive type, number of the axles, horsepower, and age would be captured the important factors influencing the fuel use, but the benefit could only be achieved by paying a high price in the form of the term of extensive record keeping. Alright, alternative. The Railroad Accounting Principle Board considered the cost center accounting to increase the homogeneity of the recorded costs. It was able to follow the benefit of the work of the Interstate Commerce Commission was studied with the cost center with the accounting with the docket number 37203, decided on October 26, 1979. Alright, cost centers are cost of pools with the accumulated with the cost level below the sub-activity. For example, the geographic density for the cost of the centers of the possible alternative breakdown of the maintenance for the way expensive of the geographic cost center of the group with the expensive of the geographical areas. Density cost centers with a group of these expensive in traffic density with the basic million with the gross tons per mile. For example, the follows. 20 million gross tons per mile above 5 to 20 million gross tons per mile, 0 to 5 million gross tons per mile, and track subject to abandonment. Alright, both geographical density costs capture the density relation to primary casual factor of the maintenance of the way expensive. The geographical cost center must helpfully identify the cost center factors such as the working method, track condition, terrain, climate, type of the train, service ability of these cost centers to isolate the casual T factors and improve depending on the level of disaggregation, aggregation, chosen by the operator division, roadmaster, territory line segment. Theoretically, each successive lower level of disaggregation cost center would identify more casualty factors. Density cost centers would cause course capital only the cause of the factor of the density search cost would, however, be less cost lead to install and maintain. Analysis of the alternative of the railroad accounting principle board conducted with the railroad keeping costs either the cost form of the cost center accounting would be probability outweigh the benefits that would be realized. The conclusion results limited use for the general purpose costing since the uniform railroad costing system would be primary beneficiary of the costing center accounting. The general purpose costing center has limited use for three reasons. One, limited amount of traffic subject regulation, approximately 20%, the frequency of which specific studies are used, and three, the use of the standalone costs, maximum rate cost, the very nature of the general purpose allows the force to relay averages, therefore by never able to attain the degree of accuracy attained with the special studies. Additional discussion on cost center accounts are provided in the chapter 18, page 111. Applications effective. The homogeneity principles mainly apply with the general purpose cost system, such as uniform railroad costing system, applied with the application with the cost pools established with the subsequent assignment to subjective. For example, the abandonment of the homogeneity principle applied with both of the branch cost with the cost of the moving track originates the termination of the branch line over the main line. Such costs are assigned to the branch line, assumption that the cost of the mainline traffic are homogeneous. Chapter 3, Practical Principles.